The Invesco QQQ Trust, often referred to by its ticker symbol QQQ, is a type of investment vehicle that has gained significant popularity among investors. Think of it as a basket that holds pieces of many different companies, allowing you to invest in a broad range of stocks all at once. This basket is known as an exchange-traded fund, or ETF. ETFs are traded on stock exchanges just like individual stocks, making them highly accessible. The QQQ specifically focuses on technology and growth companies, which are often at the forefront of innovation and development. Because of its focus, QQQ has become a popular choice for investors looking to capitalize on the tech sector's potential for high returns. One of the key advantages of QQQ is its liquidity. It's easy to buy and sell, which means you can quickly adjust your investment as market conditions change. You can purchase shares of QQQ through your brokerage account, just like you would with any other stock or ETF. Investing in QQQ offers a way to gain exposure to the NASDAQ 100 index, which includes 100 of the largest non-financial companies listed on the NASDAQ stock market. This index is a benchmark for the performance of major technology and growth companies, providing a snapshot of the sector's health and trends. By investing in QQQ, you essentially own a tiny piece of all these companies, spreading your investment across a diverse range of industry leaders. Diversification is a key principle in investing, and QQQ offers a simple and effective way to achieve it. By holding a variety of stocks within one fund, you reduce the risk associated with investing in a single company. Over the years, QQQ has shown strong performance, reflecting the growth and success of the technology sector. However, it's important to remember that past performance is not indicative of future results. Investors should always conduct their own research and consider their individual risk tolerance before investing. QQQ can be a valuable part of a diversified investment portfolio, but it's crucial to understand the market dynamics and potential risks involved. Consulting with a financial advisor can provide personalized insights and help you make informed decisions about incorporating QQQ into your investment strategy. Whether you're a seasoned investor or just starting out, QQQ offers a convenient and efficient way to invest in some of the most influential companies in the tech industry. Understanding the Invesco QQQ Trust can empower you to make smarter investment choices and potentially benefit from the growth of the technology sector. QQQ's strategy is simple. It aims to match the performance of the NASDAQ 100 index. This index is heavily weighted towards technology companies. Think Apple, Microsoft, Amazon, and Google. But the NASDAQ 100 isn't just about tech. It also includes companies in healthcare, consumer discretionary, and communication services. This makes QQQ a well-diversified investment within the growth sector. By tracking this index, QQQ offers investors exposure to innovation and potential for high returns. QQQ has a strong track record. Over the past 10 years, it has significantly outperformed the S&P 500 index. This means it has delivered higher returns for investors. However, past performance is not a guarantee of future results. The stock market goes up and down. There are risks involved in any investment. It's important to remember that investing is for the long term. Don't panic if the market takes a dip. Ride it out and stay invested for the long haul. Why should you consider investing in QQQ? One reason is diversification. Instead of picking individual stocks, you get exposure to 100 different companies with just one investment. Another reason is innovation. The NASDAQ 100 is home to many companies at the forefront of technology. These companies are constantly innovating and disrupting industries. By investing in QQQ, you're investing in the future of technology and the potential for growth. Sector Spotlight Technology and Beyond in the QQQ portfolio. As we've mentioned, technology is a major part of the QQQ portfolio, but it's not the only sector represented. You'll also find companies in healthcare, consumer discretionary, communication services, and more. This diversification helps to reduce risk. It's important to understand the sector weightings of any ETF before you invest. Make sure they align with your investment goals. Liquidity and flexibility advantages of the QQQ ETF. The QQQ ETF, which tracks the NASDAQ 100 index, is one of the most popular and widely traded ETFs in the market today. QQQ is an ETF, which stands for Exchange Traded Fund. It offers investors a way to gain exposure to a broad range of companies, particularly in the technology sector. ETFs have several advantages over other types of investments. One significant advantage is liquidity. Liquidity refers to how quickly and easily an asset can be bought or sold in the market without affecting its price. ETFs are traded on stock exchanges, just like individual stocks. This means that during market hours, you can buy and sell shares of the QQQ ETF with ease, taking advantage of real-time pricing. This means you can buy and sell them easily throughout the trading day. Another advantage is flexibility. Flexibility in investing is crucial for managing your portfolio according to your financial goals and market conditions. You can buy or sell as much or as little of an ETF as you want. This allows investors to tailor their investments to their specific needs, whether they are looking to make a large investment or just dip their toes in the market. There are no minimum investment requirements. This makes ETFs accessible to a wide range of investors, from beginners to seasoned professionals. Additionally, the QQQ ETF offers diversification, as it includes a variety of companies, reducing the risk associated with investing in a single stock. By investing in the QQQ ETF, you gain exposure to leading companies in the technology sector, such as Apple, Microsoft, and Amazon, among others. This diversification can help mitigate risk and potentially enhance returns. In summary, the QQQ ETF provides liquidity, flexibility, and diversification, making it an attractive option for investors looking to gain exposure to the technology sector and the broader market. Low costs, high potential, the QQQ expense ratio. Every investment comes with costs. One cost to consider is the expense ratio. This is a fee charged by the fund manager to cover operating expenses. QQQ has a low expense ratio compared to many other ETFs. This means more of your money is working for you. Lower costs can lead to higher returns over time. Risk and reward, understanding QQQ's volatility. When we talk about QQQ, we're referring to an ETF that tracks the NASDAQ 100 index, which includes some of the largest non-financial companies listed on the NASDAQ stock market. This index is heavily weighted towards the technology sector, which is known for its rapid growth and innovation. Investing in QQQ is not without risk. The value of QQQ can be highly volatile, reflecting the performance of the underlying tech stocks. This means that while there are opportunities for significant gains, there are also risks of substantial losses. Like any investment, its value can go up and down. The fluctuations in QQQ's price can be influenced by various factors, including changes in technology trends, company earnings reports, and broader economic conditions. Investors need to be prepared for these ups and downs. The technology sector, in particular, can be volatile. Innovations and disruptions happen frequently, which can lead to rapid changes in stock prices. For instance, a breakthrough in artificial intelligence or a new cybersecurity threat can significantly impact the market. It's important to understand your risk tolerance before investing. Assessing your financial goals, investment horizon, and ability to withstand market fluctuations is crucial. If you have a low risk tolerance, you might find the volatility of QQQ challenging. If you're uncomfortable with volatility, QQQ may not be the right investment for you. It's essential to be honest with yourself about how much risk you can handle. Market swings can be stressful, and it's important to invest in a way that aligns with your comfort level. However, with risk comes the potential for reward. The technology sector has historically provided substantial returns for those who can endure its volatility. QQQ offers exposure to some of the most innovative and high-growth companies in the world. QQQ has the potential to generate high returns for investors who are willing to ride out the ups and downs. By staying informed and keeping a long-term perspective, investors can potentially benefit from the growth of the technology sector. Remember, investing in QQQ requires a balance of risk awareness and the willingness to embrace the dynamic nature of the tech industry. Investing in QQQ, a long-term perspective. Investing is a marathon, not a sprint. Don't try to time the market or chase short-term gains. Instead, focus on building a diversified portfolio for the long term. QQQ can be a valuable part of a long-term investment strategy. Its focus on growth and innovation makes it a compelling option for investors seeking to build wealth over time. Remember, patience is key. Stay invested even when the market gets tough. QQQ versus Other investments, comparing your options. QQQ is just one of many investment options available to you. It's important to compare different investments before making a decision. Consider your investment goals, risk tolerance, and time horizon. What's right for one investor may not be right for another. Don't be afraid to seek professional advice if you need help making investment decisions. The conclusion: is QQQ the right investment for you? QQQ is a popular and potentially lucrative investment option. It offers diversification, exposure to innovation, and the potential for high returns. However, it's important to remember that investing involves risk. QQQ is not suitable for all investors. Before investing, carefully consider your financial goals, risk tolerance, and investment timeline. If you enjoy this video, please like and subscribe.